welcome to Ticker Symbol Live, your daily look into ARK Invest's changes in their holdings in their 5 actively managed funds: ARKK, ARKG, ARKQ, ARKW, and ARKF. To facilitate this discussion, we are going to be looking at my ARK Reactor, my dashboard specifically designed to explore everything going on inside ARK's amazing funds holding our future. Let's get started right away. We're going to be looking at ARK's data for March 5th, that's this past Friday, against March 4th, the day before that. And all we're looking for, again, is changes to their holdings to see if we can sniff out some interesting stocks to buy. Last week in the market, heavily volatile market, so we should be seeing a lot of red in these charts as they continue to sell off stocks to buy their highest conviction positions. So what you're seeing here is an ordered list of all of the holdings across all of their ETFs. And this time I've decided to order it by the increase or decrease in number of shares. So the first thing you'll notice is most of the stocks here in this change in shares column are negative. And that's because they're selling stocks as their assets under management decrease, but they are buying their highest conviction positions. So let's go over those highest conviction positions now. Leading the board, we have KASPI, KSPI. Sorry, this is the highest increase in number of shares, not necessarily their highest conviction picks. Their number one pick, always Tesla. And what we're looking at is change in conviction right now, looking at number of change in percent shares being held. So by that measure, KSPI, KASPI, Trade Desk, TTD, Virgin Galactic, they bought 11% more shares on Friday than they had on Thursday. Ticker symbol SPCE. Workhorse, ticker symbol WKHS. And Vuzix, ticker symbol VUZI, rounding up the top 5. Most of these are going to be in ARKQ. Trade Desk is going to probably be in ARKW. And KASPI is an ARKF. It is an ecosystem, a fintech and online marketplace ecosystem. And we can dig into those in a little bit of detail at the end. Rounding out the bottom of the list, their biggest sellers are Lightspeed Point of Service, POS, ticker symbol LSPD. This Morgan Stanley is just their cash position, and you can see they've been spending cash like crazy as the market dipped last week. Google Alphabet, this is one of their biggest stable positions in most of their ETFs. I believe they treat this like a cash-like position. And of course, rounding out the list as their bottom mover is Rockwell. Rockwell had a bad quarter, and I believe this is a result of a change in conviction, not a lowering in a cash-like position. So we'll talk a little bit about Rockwell at the end. And then they added a new position on Friday, March 5th. That position is Seer Inc., ticker symbol SEER. They added it to ARKG, and we'll go over a slide or two from their investor presentation as well. So let me just repeat that list quickly for everyone just joining us. Their biggest movers upward have been KASPI, KSPI, Trade Desk, TTD, Virgin Galactic, SPCE. I'm sure that's in preparation for ARKX. Workhorse, WKHS, and Vuzix, VUZI. Their biggest movers downward have been Lightspeed, LSPD, cash. They've been spending cash. That's a good sign. Alphabet, which is GOOGL in this case, and Rockwell Automation, ROK. So hopefully that gives you some stocks to analyze both on the buy side and the sell side. The other thing we can do is we can reorder this list by change in ARK rank. So looking at which stocks are moving the most upward and downward in terms of conviction if you combine all these funds together. What we were just talking about is change in shares, but change in shares doesn't always mean change in rank. So if I organize this list, the top movers, again, Trade Desk, we see is a real big mover in terms of ARK rank. CM Life Sciences, CMLF, Cirrus Corp, CERS, and Compugen, CGEN, and then Teledyne Technologies, TDY. So mostly funds in ARKG and ARKQ. And the biggest lowering in rank, NVIDIA Corp. This is just another cash-like position. I don't believe they feel any weaker about NVIDIA. So NVDA moving downwards. And again, even by rank, whether you measure by rank or by percent change in shares, Alphabet, cash, Google, and Cash, right? And then Rockwell, of course. If we look at the Kathy indicator, we can see that, let me just unselect stuff here. We can see that this is a measure of how many cash-like positions she has in each fund, right? So in ARK, there was 56 funds, 56 stocks in the fund this time last week, and now there's 55. So barely a change, plus or minus one, I consider that noise. ARKG, same thing, 56 to 57, but the real big mover has been in ARKW. So they had 57 stocks in that fund last week. They currently have 54. So they're spending money specifically in the AI and internet sector. And then ARKF and ARKQ remain largely unchanged. So whether those stocks are becoming increasingly cash-like or not, that's what this table is trying to show us, right? By looking at how they're actually changing the positions within the fund, even if they're not increasing or decreasing the number of names. So what I'll do now is I will stop for questions real quick, and then we'll look at some investor presentations very quickly. Let me pop this back here. I think this is a fair criticism. This live stream is boring and profound. I don't know what to make of that criticism, but this is supposed to be a deep dive into data. It is definitely not a high-level pie-in-the-sky vision-based live stream. It's specifically to look at market data. So if it's a little boring for you, I appreciate that. It's a math-heavy, preparation for market open live stream. Does their cash decrease with sell offsets? If you can clarify that question, I'm happy to answer it. Their cash decreases as they spend it and or as people take their money out of their funds because they have just less assets under management. So less cash overall. But cash as a proportion of their funds should remain the same, right? They're just, the total assets is less, but the proportion of cash is all she's managing. Kathy Wood is managing percents. She's making investment decisions, not dealing with inflows and outflows, which she covered in her last In the Know with Kathy Wood. Just calling this out. Thanks a lot for your support. I appreciate everyone who joins the memberships, the Patreon, etc. Your support makes these extra live streams possible. Thank you. You do the live stuff. Awesome. So it sounds like there's not too many questions on the data. So what I'll do really quick is we'll just cover the biggest movers buy side and sell side through investor presentations, and then we'll wrap up. Let me remove this screen and let me share my browser screen. So hopefully what you're seeing here is, I can even do this. So let's go over first Trade Desk, right? Because that was one of their biggest movers. So Trade Desk is focused on targeting the advertising space, the online advertising space, right? There's a fundamental shift happening in advertising, and it's bigger than just digitization, right? Basically, what's happening is more and more ads are going digital and being able to be manipulated in finer and finer ways, right? So imagine the old TV days where, you were getting random ads that had nothing to do with your lifestyle, whatever, right? You're a young male and you're getting ads for diapers. You're, an elderly female and you're getting ads for motorcycles, right? Very untargeted. As things move digital and become more controlled by artificial intelligence and things become more targeted, you can make way more money per dollar you spend on ads because you're getting ads to people that are really relevant. So what Trade Desk does is it's leveraging this big transformation to digital, and it's taking it all the way by offering customizable, hyper-targeted advertising services. So this is going to be a stock in ARKW. This is one of the biggest movers upward. So I'm just trying to give you a sense for the type of things that Trade Desk does. They're a software platform in the online advertising space. Next, we have Kaspi. Kaspi is another one of the biggest movers upward. Kaspi is a fintech platform that focuses on three things: payments, marketplace, and financial technology. So it's an indirect competitor to companies like Square, and you should expect to see this stock continue to rise in the ARKF fund. So just giving you a sense for what Kaspi does, so you have a jumping off point to go do your own research. We can look at Rockwell, one of the biggest movers downward. Rockwell reported 7.1% year-over-year sales declines, right? Their organic sales are down almost 10%. Their annual recurring revenue is up double digits, but their adjusted earnings per share is only up 11%. So they're seeing reported sales downward, organic sales downward. And I'm sure if we dig through this presentation in detail, we can sniff out the types of things that Cathie Wood is looking for and why she may have lost conviction in Rockwell. But I just want to highlight some of the numbers to you, so you can understand that when we're going through investor presentations, we can sort of sniff out these types of things and understand ARK's moves as a reflection of their conviction in these stocks. We can look at Lightspeed point of sale, right? So a point of sale platform focused on small and medium businesses that are going online. And they do a lot of amazing things to empower small vendors to join the online digital revolution in e-commerce. So the types of things they offer are the comprehensive back office suite, omni-channel reach. So, whether you're talking about on mobile, in store, in marketplaces, or even development APIs, and then payments and financing, right? So another ARKW, ARKF, internet meets commerce type stock. And then finally, we can look at their new position, which is Seer Inc., which is added to ARKG. And then they don't have an investor presentation that I could find, but they have a really great talk at the JP Morgan Healthcare Conference in 2021. I won't pretend to understand it all here, but what they're doing is they're focused on proteomics. So not genomics, but proteomics, which is slightly different. This word has appeared in several of ARK newsletters, and they believe this type of technology and editing is part of the genomic revolution. So you can see here that they're focused on the proteome, right? They compare it to the genome. Here's some stuff about how they do RNA processing and translation, post-translational modification. So again, in the gene editing space and in the proteome editing space, it appears. So there you go. 2 movers up, 2 movers down, and a new position added to ARKG. And just to go over those quickly again, it was Trade Desk, Caspi were the movers up. The movers down were Rockwell Automation. And these guys don't have their name in their own footmark. And Lightspeed. And then Seer Inc. was the new position added. That's the end, and I'm happy to sit here and take a few questions before letting you guys go to the actual market open. Nothing boring about knowledge. I appreciate you doing this live stream. Data is king. Absolutely agree with that. This may be a little boring, but data is king. Ticker symbol U focuses on the vision. Ticker symbol Live tracks the actual changes to the ARK funds, right? If there's a mismatch between the visions and the data, something needs to get fixed. So that's what we're focused on here, is clarifying our vision by looking at data. I don't have an opinion on technicals. I don't focus on individual ups, downs, trends like that. The only thing I look for is different averages. Is it under the different averages I care about? And is this a good time to buy? So I look for very, boring sell signals like, hey, it's lower than the 50-day average, and I believe in this stock. Maybe now is a good time to buy. The alternatives for people in Europe is to listen to ticker symbol U, ticker symbol Live, and find individual stocks you like. Or I believe there are other versions of the fund. We can go sniff out some of the other innovation ETFs that either mirror or closely mirror ARK. But I believe that part of what you're buying when you buy ARK Invest are the active management components of this, right? Having Cathie Wood actually manage the fund, to me, is a big selling point of actually buying ARK products. Love this stream. Thanks so much. Yep, short and quick. I'll take 1 or 2 more questions, and then we're wrapping it. It's supposed to be a high value, low time commitment stream. This is going to be the last question because it's a good one. What's stopping Tesla competitors from using simulated data to catch up on machine learning for autonomous driving? Excellent question. Let's cover it quick. Simulated data is not the same thing as real data. You have to decide how you're simulating that data and what events you're introducing. Live data is always better because every time somebody interacts with the car to take over from the artificial intelligence, that really happened. That's a real data point. You can't simulate things that you don't know because you don't know what you don't know, right? Tesla is looking at real data, so they're seeing all sorts of funky edge cases they probably didn't think about. So they're gaining real insights from every piece of data because it's real. That's not true when you simulate data because you know the bounds of your simulation. So you're never going to simulate what could be a real edge case. So there's just, there's value in simulating data, but it's never going to beat real data. And of course, my strongest conviction is going to be Tesla. So I will wrap it up there. Thanks a lot for joining. I will see you tomorrow for tomorrow's Market Open. This is ticker symbol U. My name is Alex, reminding you that the best investment you can make is in you.